and we are excited to have you guys with us. We're going to go over a few different options of what is possible when you are consolidating debt. And we're going to start with the slideshow of the presentation. So we are live on this webinar. So if you have any questions, just go ahead and put it in the chat box. Today, we're discussing refinancing and consolidating debt and what are the benefits of doing that. So the first thing that we want to discuss is what exactly are we talking about in reference to, we skipped ahead a little bit too quickly there. I apologize. What exactly are we talking about in reference to the debt consolidation, and how can we help people get a better position on their debt and handling everything that they have outstanding? The most important thing to understand is that we're really at a time right now where rates are at historic lows. We want to make sure that we're communicating to everyone how important that it is to get the debt that's at higher interest rates consolidated into one low rate. And at the same time, you may be able to skip 2 mortgage payments while you're doing that. So we have to really evaluate everybody's individual situation, but many times people have a tremendous amount of credit card debt, or perhaps have other debt outstanding that they would like to consolidate. And we really need to have everything in one type of analysis so that we can see, does it make sense for you to consolidate debt, yes or no? So what are the benefits of refinancing and trying to consolidate debt? The first thing is you're consolidating everything to one fixed rate. You are putting yourself in a position where you would be able to hopefully get a much lower interest rate than what you currently have now. And as such, you should be saving money each month by doing that. The other thing about refinancing and consolidating debt is that many of the interest rates on credit cards are actually tied to what's called the prime rate. The prime rate is one of the rates that the Federal Reserve controls. So it's very important that you understand that there is no top to that. In other words, you could be paying 30% interest on this credit card and be in this really kind of horrible circle of constantly paying down credit cards and just paying the interest and really not making a dent in the amount. So by consolidating the high interest rate debt on credit cards, it not only lowers your payment, but it allows you to have much more money that goes towards principal each month. So you will actually be paying that debt down quicker. And on top of that, if you're in a position where you're going to get a tax benefit by taking mortgage interest as a write-off on your tax returns, then by turning in this high interest rate credit card debt that's a variable rate into a fixed rate that is now tax deductible, that is going to really benefit you tremendously. So we have to really take, one step at a time and take a look and see, does it make sense for us to consolidate the debt, yes or no, and what kind of debt it is? A lot of times people don't realize that by getting rid of your revolving credit cards, you actually can improve your credit score tremendously. So by putting everything in one loan with a low interest rate that's a fixed rate, you are actually improving your scores tremendously, because now you no longer have a certain percentage of your credit limit that is being used that affects your score. So let's back up for a second and say, what does that mean? Well, when you're paying credit card debt, or when you have a revolving trade line, which, by the way, home equity lines are also considered revolving trade line, if you use more than 30% of that credit limit, your scores actually go down. And if you use more than 50% of the credit limit, your scores go down even more. So you don't want to be in a position where your scores are constantly on the lower end because of the amount of credit card debt you have, and you're also in a high interest rate, and you're in a variable rate. So this just helps you tremendously to be able to put yourself in a position where you are improving your credit scores and putting yourself in a position where you can pay the debts off quicker. So the next thing that you want to look at is the fact that many credit cards, almost every credit card, is tied to the prime rate, which again is a variable rate. Well, what else is a variable rate? A variable rate also is something where you can, let's go back to that slide for 1 second. A variable rate is also an equity line. An equity line is tied to the prime rate. And so you want to make sure you understand that even a home equity line of credit does affect your credit score. If you've used your entire home equity line, now you're over 30% of your available credit limit. You may be over 50%. You may have used the entire equity line. That is also keeping your scores down. So it's really important that we take a look at your situation and we talk honestly about how can we improve your cash flow? How can we get your monthly payments to be far less? And at the same time, you may be able to skip 2 mortgage payments by refinancing. So for example, if you call us today and we start the process now and you close in December, there is a possibility that you may be able to skip December and January or January and February. So this really does help from a cash flow perspective. And on top of that, of course, the benefit of you consolidating everything into one low payment and getting rid of all of those bills that you have should improve your cash flow tremendously. So it should save you a lot of money each month. And if you take that money and you reinvest it into paying down towards the principal on your mortgage, you'd actually pay your loan off much quicker than what you would have otherwise. So if you're saving $1,000 a month and you take that savings and you put it towards paying your mortgage, we can actually run some amortization schedules for you to show you how much equity that you're building in your mortgage and your property. And the most important thing is a lot of people don't realize that equity lines are tied to the prime rate and are variable. So everybody who has an equity line out there, you need to be really well aware that right now is a time where the rates are very low and that your equity line right now is tied to a very low prime rate. But what's going to happen 5, 7, 10 years down the road? If you don't think that you're going to pay that equity line off in the next few years, you really should look at consolidating it into a fixed rate, because in a few years from now, we don't know where the prime rate will be. And you will have lost the advantage of being able to get a very low fixed rate right now and then be in a much worse position because you're going to be paying on a very high interest rate with your home equity line. And remember what I said a few minutes ago about equity lines. They are revolving trade lines that are tied to the prime rate. So they report like credit cards. So funny thing with credit, whether you have a $200 credit card, a $2,000 credit card, or a $200,000 equity line, the amount you owe is not as important as the percentage you owe. So if you owe 30% of the available limit, let's say on a $20,000 credit card, that's basically $6,000. If you go over that, your scores start worsening. If you go over 50%, which would be $10,000 on a $20,000 credit card, your scores even get worse. So if you have an equity line that's completely tapped out, your scores are really being affected, and that is not a good thing. So by converting that into a fixed rate and then also converting it into an installment loan, which is what fixed rate mortgages are, installment loans, that's going to make a significant difference in your ability to improve your credit scores. And, one of the other things I'd like to discuss is the most important thing is when you are applying with us, that we will give you a very honest answer. So the best place to go is to our website, thetruthaboutlending.com. Either myself or one of our representatives will get back to you in reference to applying for a debt consolidation loan or a cash out refinance loan. There's many different options that you may have. And now is really the time to take a look at this, especially if you have any type of debt outstanding. So we will be happy to send a copy of this PowerPoint presentation to anybody who's interested. We're also going to be posting this in different social media sites. And if you'd like to reach us, here are some good numbers to reach us at, but you can always contact us on the website or any other form of phone number here. Again, the most important thing is if you are interested in getting the process started, go to our website at thetruthaboutlending.com and one of our representatives will get back to you. Thank you so much for joining us for our webinar of the week. And we will be back every week from now on with some additional great webinars and lots of information for all of our prospective borrowers out there to give you the truth about lending. Have a great day.